Hey, y'all, welcome to the Coyote Trapping School Podcast. Coming at you, hopefully, on the verge of getting unquarantined here as I'm trying to record a few episodes ahead. So this is being recorded about 3 weeks ahead of time. And hopefully we are getting beyond past this whole coronavirus situation. I pray for y'all. I feel for any of y'all that have been impacted. We've been fortunate enough that, our family and loved ones and all have stayed virus free. And so that's fantastic. In line with that, and in line with the topic that we've been discussing of starting your own, growing your own nuisance control or wildlife control business, that's one thing that has not really slowed down through this time. In fact, in some situations, it may have picked up a little bit because people are home more, and so maybe they hear more of what's going on when they're at home versus when they're gone. So whether you're looking to something for something to be a full-time gig or just something part-time with some little side income, additional income, I definitely think that being a wildlife patrol operator, having your own trapping business is beneficial, and most importantly, running it like a business. If you are trying to have a business is hugely important. That's what we're diving into. Have been for the last couple episodes, this one especially. So before we get started, got to thank our sponsors, Coyote Bros Lures. Appreciate them supporting what we're doing here at Coyote Trapping School. They see the impact and importance of not necessarily importance, I guess to an extent, the different platforms. There's a lot of people that are still putting a lot of money in print ads, but I can't tell you when the last time that I read a magazine was. I get Trappers Post and some other magazines sent to me every month or every other month, how they come, and I wind up saving them because I want to read them, but I never do. I never make the time or have the time. So advertising on platforms like this, this podcast gets put out on all podcast players as well as on YouTube. I try to share it on Facebook and different things when I can. So we're trying to get the word out as much as possible. But if you're watching this, if you enjoy and appreciate what we do, head on over to cotsbros.com, KAATZ, Cots Brothers Lures, and hit up your trapping supplies for this next trapping season, 2020-2021 trapping season. It's coming quick, and now we're still kind of spring, early summer, so it's not terribly sweltering hot to be out messing with traps and getting things ready for next season, and taking inventory of what you need, and making that list and going ahead and getting things ready and prepped ahead of time, because, man, who would have guessed this whole coronavirus situation would have come like it did, and how it's impacted businesses and different things. And I don't think it's impacted Coyote Bros. I think they've been shipping and clicking right along. They gave us some coupon codes to last month to help educate ourselves with DVDs, books. So if you didn't take advantage of those, still go check out their DVDs and books, and use this time between seasons to help become a better trapper. Or if you're if you're running a wildlife control business and you're trapping right now, there are still opportunities to learn and take advantage of these opportunities. So check out Cots Bros and put your order in. Also, if you need any kind of beaver tail, wallets, that's all I've been doing. I'm gonna try play around with some belts, but if you wanted something made out of your beaver tails or mine, let me know. I'm doing wallets. Let me pull out a couple. Got the roper style, large roper style. I can do checkbook covers as well. I hadn't done many of those. And then bifolds, working on some trifolds. Hopefully those will coming soon. But hit me up. I definitely love to help you out, help support the trapping industry. I'm trying to got some other things in the works with some fur. Just trying to really generate my own market. The fur market, who knows what's going on with the fur market, and there's never been that great of stuff going on with the southern fur market, short of the otters back in 2005 through 2007, something like that, when southern otter prices especially, were great. Live market, if you can catch live market coyotes and want to deal with that hassle, you can make a little money there probably, but outside of that, there's no real fur market, not much of a fur market in the South. So trying to make something that we can actually justify buying fur, and also they can keep it local. I like the idea of the fur industry and being able to sell fur, but I kind of hate the idea that all of our fur goes overseas, the majority of it, people here never see, never see fur, never see what the use is of why we're trapping. And if we can promote something that's local, that supports our fur market, but also supports and promotes the fur that we produce, and I think that would be an awesome opportunity. So I have still working on that, because beaver tails are not necessarily part of the fur market, but beavers are. And so anyway, hit me up if you want to help support the market in that way, and at least maybe we can get to the point of having enough demand that we're buying tails, because any supplement to the trapper's income is definitely appreciated. I know that. So I'd at least like be to the point where I could buy something from trappers. And if that's initially tails, then hey, I'm all for that. Let's start buying tails. Sell your beavers to the grown walls for the hatter market, and sell your castor and sell your tails. Maybe out of all that, you can make up enough to buy yourself a soda pop or something. Another little Yankee talk for y'all. But all right, so back to the real business here, and I'm fixing to switch over. I've never done this before. I'm going to do a screen recording. I'm going to show you a spreadsheet that I've put together. It's what I just kind of tentatively got called an overhead spreadsheet, and it's trying to calculate, what anyone's overhead is. And this is something that can be used. I tried to make it where it was simple to use and could be used by anybody. So my idea with this is, I'm going to make this available. If this is something you want to play around with, shoot me an email, Chris, KRIS, at coyotetrappingschool.com, or message me on Instagram or Facebook, and I'll send you a link. And I'd like to see. I think this has a potential to be one of the most valuable things that I've put out so far, just because I hope that this helps trappers to realize not only what we bring to the table so far as our knowledge and experience, but also the other things that we bring to the table that cost us money that we don't really think about all the time. So I'll delve into that in just a minute, but before I get to that, I wished I had a copy of the book. One of I bought an audio book last year after I went to a business conference called Profit First by Mike Michalowicz, and he's got a crazy spelling last name, but if you just type in Profit First Mike, it's probably going to pop up in Google, and I will give a link to Amazon and his website as well. This, if you're a current operating business, or if you are looking to start and get into the business, or a business, any business, man, I think this is required reading. It's a different take. It's more of a common sense take on accounting and cash flow, and having, I've messed around ever since I was in high school. I sold firewood, and I mean, I've sold something on the side pretty much my whole life, and I've never really managed it that well. And over the last 2 years, really, of trying to run a more meaningful, real business, it's kind of been brought a little bit more to my attention. And then as my wife, as she's grown a business and been running a business the last couple of years as well, and it's something that me and her have talked a lot about. And it's just the general idea or way that most people run a business is, you get paid for something, and then you take out your expenses, and then whatever's left over is your profit, right? That's what you go home with. And man, over the last couple of years for me and her, it's been kind of crazy that once you get paid for something, you take out your expenses, how little is often left there, and it's just struggling to try to figure out what's going on. And then also, so last year was the first year that we both used QuickBooks. So QuickBooks Self-Employed. And so we use that for tracking all of our expenses, all of everything, so that we could have something easy to turn into the accountant, so she could, do all our tax information. And so everything, that I would recommend that or something like that. Somebody messaged me. I'll do an episode on kind of tools, but somebody messaged me the other day with it's a lawn care app that it's geared towards lawn care, but it's another bookkeeping app. I'll look that up and include that too. But it's free. QuickBooks is, I think I pay $10 a month. It's $10 to $15 a month, and but you link your bank accounts, credit cards, all that, and then it automatically pulls that data. So if you get if you get a deposit or you make a deposit into your bank account, then it shows your income and you have to categorize it. If if you're buying stuff, it'll pull in your expenses and you have to categorize it, and then it'll give you a quick snapshot of profit for whatever time period that you want to select. And it's funny, if you're running a business like that, your profit should kind of match somewhat your bank account, you would think, but it doesn't always, and that can be a real head scratcher. And so, man, when I listened to this book, I heard some folks recommending this book, and I was actually in Kentucky, and so I bought the audiobook and listened to it all the drive home. I've been listening to podcasts and things for so long. I listened to everything on double speed, and so I knocked it out pretty quick. But the stuff that he said just made so much sense. And so he's got a bunch of resources online. So if you buy just the audio book, he's got resources on his website, and you don't even have to buy anything to go get these resources. But I printed these off just because I don't have the physical book in hand. But kind of his approach is, generally, like I said, the generally accepted accounting principles is sales minus expenses equals profit. His thing is flip that around. Sales minus profit equals expenses. And, so you need to, just like people say for, budgeting and retirement and all that, you got to pay yourself before you pay everybody else. Right. And so that's kind of what it gets down to, and knowing, knowing what your profit is and your owner pay and all that. If you're halfway interested or in any way interested in running a business, buy that book, because it's going to help it. And one of the things that he points off right off the bat is Parkinson's law. The idea that, if you give yourself 2 weeks to do a project, it's going to take you 2 weeks. Whether it should have took 2 hours or not, it's going to take you 2 weeks. So, if you've got $1,000 sitting in a bank, odds are you're going to find a way to spend that $1,000. Just hitting on that, and the approach, and I'm just going to give you a real quick overview, is really to set up multiple bank accounts. So initially, he talks about setting up 3 bank accounts. Your income account, so that's the checking account where everything that all your income goes to. And so then from that, you have an owner's pay account and an operating expenses account. And you also got tax accounts. And he talks about opening several, I think he recommends like 7 bank accounts, and actually going through and allocating percentages. So, my pay is going to be X percent. Profit is going to be X percent. Taxes is obviously going to be X percent, and allocating those percentages. And then whenever you get, and depending on the level of income that you've got, I think he talks about doing it every 2 weeks. So he goes in every 2 weeks, and he's got his income account, and then he divvies everything up into all the other accounts. And so, based on his percentages, he puts his owner's pay into the owner's pay. He puts operating expenses and everything else. And then the operating expenses is what he's got to pay his expenses out of. And so you make sure that you've got all the other scenarios covered where, a little bit longer term savings for big things that come up like insurance and things like that. I'm telling you, I hope I'm not going off too far on a rant on this, but it really makes a lot of sense. And it's something that I've even started applying to personal too. But one caveat, the one area that I see about it that really is tough to manage, and it's almost impossible to manage, is if you're trying to manage with a credit card. That's what a lot of us do, especially in in a service business where you may do an exclusion work and doing ridge cap sealing or something like that, or just exclusion work in general. You get a big job, you can be shelling out a couple $1,000s in supplies before you get paid. And so it's easier, and it's sometimes necessary to use a credit card to kind of buy that credit to where you can do the job and then get paid, and then you can cover that. And I think there's room for that still, but if you're using a credit card for everything, it's so hard to manage expenses, and you'll wind up at the end of the month, all your money goes to paying for the credit card because it's just so easy to swipe, and you don't take account of those expenses. And so, really, I think the best way to manage is to maybe you have a credit card, but you only use that for those large jobs where you are having to buy a big chunk of supplies that you don't have the cash for. But and it takes a little bit because generally you're getting paid after the fact for the work, so you're going to have to kind of figure out how to work into it. But if you can get it to where you're using your debit card for those expenses, that's the best way to manage those expenses and to make sure that you're having you have those other categories filled. And one of the things that I really like that he talks about is you set your profit account up at a different bank than you got all your other accounts, and you don't have mobile access to it. To get to do anything with that account, you have to go to the bank, and that way every month you allocate your percentage to that account, and you don't ever see it, because if you don't ever see it, you're not going to be tempted to spend it. Just little things like that, and like I said, really the key that I've kind of figured out since doing this too is not operating with that credit card so much as operating with a debit that you can consistently track, and you know what those expenses are, because it is so easy. And that's something that I've always done. I've always personally have had a credit card, and I always pay it off at the end of the month. That was kind of something that my dad instilled in me. But I do think Dave Ramsey's right. You don't see, it's easy to swipe that, and you're not as cognizant of that expense as if you are shelling out the cash or you're checking your account before you swipe that debit card. So the key takeaway to that is, if you're getting anything, if you are interested in running any kind of business, definitely I would recommend buying this Profit First book, or anyway, audio, the actual book, and reading it and trying to implement those principles as you start or as you continue your business. So with that, we will dive in, and I'll give this other portion a try. Now, you podcast listeners, I apologize for this, but this is going to be, if you're getting anything out of it, you're probably going to have to go to the video and watch, because all this is going to be a screen recording of the spreadsheet that I've got. So I'll try to walk it through and explain as much as I can audibly, audio wise. But you're probably going to have to go to the video version of this podcast to see exactly what I'm talking about and to get the most out of this. So it'll be on YouTube. I'll put a YouTube link in the comments, and I'll also try to send everybody, if you're on my email list, I'll send everybody a link to all this. I usually put links in the comments, or the notes section, or the description of the podcast, but in iTunes, you're only allowed so much, and I don't usually get all of my links in on iTunes. But if you're listening to some other on some other device or player, then you should be able to look in your notes and see links, see the video links for this as well. So anyway, hope you enjoy, and let me know what you think. Okay, so here is an Excel spreadsheet that I put together. Looking at it on the left-hand side, I just got it labeled as overhead. It really costs, it's just, it's line itemed out, the different costs that, and definitely probably I'm missing some, but as I sat here and mulled on it more and would come back and look at it, I would think of a few more things. So, this is definitely a starting point. and this is something that everybody needs to look at. Look at these line items and see what else may be a factor um, in your business. So, and I'll go through each one of these item by item, just to kind of give explain and kind of give a audible for the podcast listeners what we're looking at. The next column is the estimated yearly cost. So some of this is based on hourly costs or salaries and things like that. But that just gives you a snapshot of what your estimated yearly costs are, and should give you a total, at the bottom. If you can achieve all of these targets, then, that tells you how much money, how much revenue you're going to go through at the year end. Now, that's not how much money you have, but that's how much money that you would have brought in total if you were able to achieve these targets and use this as a pricing model. The next column is monthly. So to me, the yearly, monthly, and weekly are just kind of targets that gives you an idea. And so it breaks it down. And at the top, the very top, I've got numbers plugged in over the monthly, weekly, daily, and hourly columns. Now, these can be changed, these numbers, and they will affect everything in the columns below them. So that's how these monthly, weekly, daily, and hourly columns are based. They're based off of the estimated yearly cost divided by that time period. So for months, it's 12 months. So at the current pricing that I've got figured in here, your monthly target is $20,000 a month. Weekly, I've got it plugged in as 46 weeks. Ideally, in my mind, as an entrepreneur, one of the benefits of running your own business is freedom and flexibility. And so this figures 4 weeks off, a week a quarter off, as well as 10 days of holidays. So Christmas, Thanksgiving, Memorial Day, all that. So 2 weeks of holidays, 4 weeks of time off. And that, using this model, that represents paid time off. And there's nothing saying that you have to take 4 weeks off. If you wanted to plan on working, 50 weeks a year, you just change that to 50, and boom, it tells you what your target needs to be then. But there's nothing saying in any of this that you can't work more than what you figure on. But if you figure on less and you do work more, then that's all upside, because where you're figuring on the lower rate, that's going to lower your that's going to raise your, let me make sure I'm thinking about this and saying this right. That's going to raise your targets, what you're basing your pricing off of. So if you actually work more days at those higher targets, you're going to bring in more revenue. The next column is daily. So this is 5 days a week based on 46 weeks, which is 230 days. Now, we all know if you're trapping, if you're checking traps, those traps have to be checked Saturday and Sunday as well. So this is based off of a 5-day week, but the daily rate is still good. So if you're pricing a job, you need to take into account that I'm gonna have to check these traps, or I'm gonna have to do this on Saturday, and so you need to price accordingly, whether that's so many hours at the hourly rate or whether that's a full daily rate. And again, this can be changed to you have to calculate it out. But if you wanted to do 4-day weeks, you wanted to work 4-day weeks, so you would just do 4 times the 46. So that gives you 184 working days. So that bumps your weekly or your daily rate up to $1,268 versus at 230 your daily rate was $1,014. Again, this is just a baseline. This is just a ballpark to give you a starting point. And then your hourly rate, I figure we're probably at least looking at working 10 hours. So I figured that at 10 hours a day, if you're able to work and you've got the jobs to work 14 or 16 for all the days that you're accounting for, that's just extra money in the bank. And if you wanted to drop it and you only wanted to work a hard 8-hour day, then you plug in 8 there, and it's going to change everything. And so your hourly rate goes from $101 to $126 an hour. And so I feel like just right off the bat, so you've got your columns with your yearly, monthly, weekly, daily, and hourly, and then at the bottom you've got totals. So as this is calculated up, this gives you a yearly revenue of $233,000. Now that's not profit. Please make sure that's revenue. That's just total money brought in. You still got to take your expenses out of that, which hopefully your expenses are overall accounted for in this figuring. Or you include your expenses on top of your hourly or your daily rates would be an even better option. So that puts you at a monthly target of just under $20,000 a month, a weekly target of $5,000 a week, or just over $1,000 a day is your daily rate. So that's $101 an hour. Now, I know folks are going to look at this and say, man, ain't nobody making $101 an hour. I would beg to differ. No one person is making $100 an hour, but these businesses, these larger businesses, and that's what I'm going to get to is, in some of this, you may think that this doesn't apply to you. Like, I've got figured in labor, for another person to help on your job. If you may say, well, I don't have anybody that's helping me. So I don't need to include that. Well, I beg to differ, because there's other companies that are pricing jobs figuring on multiple people doing that job, and they've got to pay each one of those people. They're also figuring in these overhead expenses. They've likely got more because they've got administrative people, maybe larger offices. They've got a fleet of vehicles, and then they've got their the owners and the profits and all that built in. So they're likely bidding these jobs and billing these jobs at a higher rate than even this is, at $100 an hour. Now, you're not bringing home $100 an hour, but to bring home, what I've got in, which I think is a fair wage, honestly, as a business owner, I would hope that, after a few years in business, that would be a low wage and you'd be a lot higher than $80,000. But I know there's people that, are, $80,000 would be an exceptional wage for them. And so I think all of this is going to depend on where you're at, for one. What you can charge is all dependent on what people are willing to pay. And if you're in a more rural area, you better be within driving distance of a larger suburban area in order to charge based off of this model, because we all know, folks out in the country handle these problems themselves. They don't call somebody to. And so that's a major part of your business model of, considering whether you want to start a business is, do you have the customer base that'll support your business? And so in figuring out what that customer base can afford and is willing to spend. So, out of this $100 an hour, you're looking at the owner's salary is $35 an hour. So it's a good wage, but there's a lot of expenses. That's what I feel like this highlights, is there's a lot of expenses that go into an hour's work on a job site. And so that's where let's dig right into this. And I don't know if I already covered this, because I recorded part of this one time and realized my microphone wasn't on, but these estimated yearly costs, that's what the whole rest of the sheet's based off of, is the estimated yearly costs, and then the the numbers for the monthly, weekly, daily, and hourly at the top. Either of those can be changed and it will affect the rest of the sheet. So if you wanted to plug in here and say, I want to make $200,000 a year. You put in $200,000 a year, it changes everything. So now your hourly rate that you've got to be charging is $182.33. So I tried to make this as user-friendly as possible and as easy to manipulate as possible, so that anybody can take this and make it their own. I do think that this is potentially one of the most valuable things that I put out so far. Just because I hope this does open people's eyes to how much does go in to a business and pricing fairly your services. So right off the bat, thinking about the profit first model, got profit figured in there, 25%. Now this is a percentage of the owner salary. Realistically, the profit should probably more be a percentage of your revenue. So I'll leave that like it is for now. That should probably be a percentage of the revenue. Well, we can change this right quick. So I can, and this may be a circular formula. Yeah, so I can't change that. So we'll leave it as is. The profit as a percentage of the owner salary. But in the end, you want your profit to be a percentage of revenue. And so that can be adjusted accordingly. You can figure that offline. So if you wanted to say 25% of $233,000, 25, let's see, 233. So that would be $58,000. So if you wanted to plug that in, so boom, that jumps all your rates up. That also brings up your revenue up, right? So all this stuff can be manipulated very, very easily, I hope. All right, so next up is health insurance. And if you have, this is going to be up to you to plug in your realistic costs. If you don't have health insurance, or if you have health insurance through a spouse, I would still encourage you, what does it cost? What would it cost for you to get health insurance? Just in case, Lord forbid, whatever happens, your spouse loses their job or they no longer offer health insurance benefit. Because again, there's other companies that are charging figuring on all these costs. So if you can charge figuring on this cost, set that money aside. And then if you do have to start paying for health insurance, or if your spouse wants to, part of the plan is for your spouse to quit their job and come to work for the company, or just be a stay-at-home spouse, then, you've got the money there to afford that. Then you got retirement savings. That's 15% of the owner salary. Some companies will match a portion of that for the employees. Very rarely do they cover that much. Usually it's a matching of, a couple, 2 to 3%, but you're your own boss. You're responsible for everything now. So, you need to build that in as well. All this stuff, you need to make this, you need to make it profitable. You need to make it worth your time, because you don't just want to own a job. This needs to be an asset, something that betters you. So, if you've, you don't just want to be shooting for making X salary, or making, the salary that you got now. The benefit is the upside of being able to do more, in my opinion. So you've got retirement savings there, plug in whatever you want. Day labor, so that's just $250 a day. Let's see, actually. Times. Okay, so I adjusted that a little bit. That brought it up, but that's $250 times your daily rate. So that's a dang good wage. The thing to keep in mind there is if, depending on how that person is billed, and if you got a consistent employee, that's probably on the high end, unless they're doing something really outstanding. So let me adjust this. So let's adjust that down to $200 a day. That gives you 46,000. So, but keep in mind, if you're the business owner, you're going to have to pay taxes. So there's going to be some expense on your end for this person, and then obviously, just like our $80,000 a year salary, that's not going to, our paycheck's not going to equal $1,700 a week. It's going to be less than that for taxes. The same goes for your day labor, or your labor. And then I tried to include federal taxes at 15%. They're just kind of self-employment taxes or whatever. That's just a guess too. Please contact a CPA to make sure that you're setting aside and accounting for the appropriate amount of tax for you and or an employee of your business. And then advertising, this one that I just plugged in. I need to kind of separate these a little bit into more columns, but advertising, that's just a pure estimate, $100 a week. You can spend way more than that. You can spend less than that. But ultimately, at $23 a day, I would say you should be doing some kind of advertising, whether that's working on your own website, getting somebody else to work on your website, unless you just are overflowing with work, then you need to be generating leads somehow. Moving down, and this is a blank spot. You can fill in whatever you wanted to here, and as soon as you fill in the yearly cost, the other ones are gonna fill in. So if you wanted to plug in a $10,000 cost there, boom, it's gonna spit it out and adjust everything accordingly. So just a blank column. Rent, I just figured up $500 a month. Realistically, if you're renting a commercial building, you're renting somewhere, that's way cheap. Odds are most of us are operating out of our house or a shed or garage or something like that. But the reality is these other companies are charging for it, and hopefully, maybe you get to the point where maybe you need a bigger garage, maybe you need a building all to your own company. So that's what this can go to. Same here with your vehicle. Most of us trappers, we're using the truck that we already got, but we're going to have to replace that truck at some point. And again, the other companies have got that stuff, replacement cost. You should have a replacement cost built into your pricing as well, because you're going to have to replace a vehicle. If it's your work vehicle, if it's your business vehicle, you need to be accounting for that and saving for that. Insurance, you're going to have vehicle insurance. Commercial vehicle insurance would be my recommendation, although I'm no lawyer. Liability insurance, there again, the same, and that's stuff that is going to, be dependent on what your costs are. So that's something you need to plug in there. Website, I think to me, website is pretty crucial. You can do your own website for a lot less than $100 a year. But that's just a good round figure to figure on. Equipment replacement. Ladders aren't cheap. It's going to take, your initial cost. Initially, your investment is going to be more than this. You may spend, $500 on ladders your first year. But figuring on buying, replacing a ladder every year. Live traps. As Stephen Van Tassel would say, that's a bogus term. Cage traps or foothold traps. That could be anything. But replacing and purchasing additional equipment, cages, whatever. And then a cell phone, right? The cell phones are not cheap. I got that figured at $400 and replacing the phone every other year. So that gives you $800 every 2 years to replace your phone with. A lot of us are cheap and we're going to keep a phone for a lot longer than 2 years, but just trying to be conservative. Then I got a materials estimate. So the way I typically try to price, and I need to, let's see, $300 times, yeah, that was right. My preference is that you figure your daily rate or your hourly rate for whatever the job cost is, and then you figure your materials in addition to that, if you can. Just because, odds are this was this $1,150 in replacement costs. That may not cover all your replacement costs, your startup capital, whatever costs you to kind of get in business. Which I didn't even include business fees and things in here, which is another line item. So let's throw this in here. Fees. Get out of here. Fees. And included in here, we probably ought to put a computer in here as well, right? You're going to need a computer to do a lot of your admin stuff. I would suggest or think. So let's throw that in here as well. A computer, you're going to keep a computer for several years. You could easily buy a computer for $300 and keep it for keep it for a couple of years. Let's just plug in 300 here. And then all we got to do is highlight that cell and carry it down, and it's going to carry down the formula. And then that's gonna calculate your cost. So there, and then fees. You probably got $100 business renewal, or a business renewal fee for the state. You got your business license, any other fee. So I would put maybe $250 here. So that figures up, and these monthly these are not that big, but again, it's a lot of things that you don't necessarily think about. Part of your computer is going to be your programs. So let's you could easily include this stuff together, but I'm trying to make sure it's obvious. So I just signed up with Microsoft to get the Office package. That's $70 a year. So and that's going to be every year. You're going to have to pay that. You need to account for it. So then we go back to materials estimate. So here I estimated $300 a week in material. If you're doing exclusion work, that's going to be way low. If you're just doing trapping and removal, that might be okay. But exclusion, I mean, you can get a couple $1,000s in exclusion material real quick. That's where I say, that's a little bit of a buffer, but you really need to include your material cost in on top of your daily rate, is what my suggestion is. Administration and bookkeeping. So until you can hire somebody, I figure on me working in the office an hour a day, working, and I say in the office very loosely, I'm in the shed right now, but me on the computer entering information for an hour a day at $25 an hour. Now, the $25 an hour, that's not where my rate I would want it to be. But, if I were hiring somebody, that might be something, a good hourly rate for that. So I've got $25 an hour times days. I need to adjust that. Days, and then $10. I really ought to break that out. So let's software, QuickBooks, a subscription, that runs me $10 a year. It might run, or $10 a month, might run some folks 15. So $10 a month times our month here, and then we'll drag this cell down. And so then we can take this portion out and just figure on $25 an hour times an hour a day for kind of your in-house administration. And that's one thing that I've tried to do, and I feel like I've just gotten a good grasp on it, but I've been trying to keep track of my leads. And so, where they come from. Are they good leads, or are they bad? I had somebody call me yesterday, 7 o'clock in the morning. I want to know who they should call about a dog on the side of the interstate. I don't know. I don't care what you do with a dog on the side of the interstate. People worry about things. I've had folks call me to tell me that there's a deer at the intersection of so and so. Call the sheriff. But you're going to get calls about dogs and cats and all that stuff. And I try to log those just so I know my ratio of total leads to qualified leads. And then I keep track of what the leads cost. So if I advertise through Home Advisor, and so that gives me a cost per lead. So I try to keep track of that. And then, what my average revenue is right now I'm doing it on a monthly basis, so that I can look and see, well, I got, this is how many leads I've got this month. This was my cost per lead, and this is the average revenue per lead. And that gives me an idea of, okay, well, that's where I'm at. If I want to get to $20,000 a month, how many more leads do I need to get? That's the only way that you can back into that is is knowing, how much your leads are bringing in now. So if your leads are bringing in $1,000 a month, and let me make sure I'm doing this right. If your leads are bringing in $1,000 a month, I'm doing some back of the napkin math here, $1,000 a month, and you're getting, let's say you're getting a lead a day, so you're getting 30 leads per month, which is probably not enough, I would say. We're going to find out here. So $1,000 a month, $1,000 per lead, which would actually that would actually be good. So you're getting 30 leads a month, so that'd be $30,000. So that'd be awesome. If you're getting 30 leads a month. Yeah. So and what that means is, depending on how you classify it, some of those leads are going to be maybe unqualified leads. So, they may be people calling about the dog in the neighbor's yard. But then some of those are going to be bigger exclusion jobs that, maybe a $3,000 or $4,000 job. So you're not looking at it so much on a job basis as a lead basis, because that's how you can't base projections on how many jobs you get, because you don't know, a job, how it's easier to relate it to leads, because you got to get the leads to get a job. And so you can kind of back into, okay, if I get one job for every 5 leads, then I need to go get 10 more leads if I want 2 more jobs, right? So anyway, that was a lot of talk, but I think that's something that's vital, that's important. Another aspect of this is, if you're maintaining your own website, taking some time to maintain that, maintaining your social media profiles, not just scrolling on social media, but posting, just to try to stay relevant and stay top of mind for people. An accountant. So, hang on one second. That is actually a call right there. Sorry about that. I had to take a little pause. That was one of my leads that turned into a sale calling me right there. So definitely, that's one of the things that's can be kind of frustrating, especially for other people in your life, is running a business. Sometimes things take priority, especially depending on how your situation is. So back to the matter at hand, an accountant. I'm gonna tell you, I was kind of raised a little on the cheap side. So, for a long while, I kind of did my own taxes, or used, online software and stuff to do taxes. But since we moved back to Georgia and I bought a house and, started a business, I started having somebody do my taxes. And man, you talk about money well spent, I can assure you. And especially, I would look at it as an investment more so than an expense, just because of the knowledge that the tax people can bring to the table, and the just the knowledge that they offer around that. That's why people hire us, is our knowledge and expertise around wildlife. And to me, that's why I hire an accountant, and I would encourage folks to hire an accountant because of their knowledge and expertise around accounting and ways to how to structure your business, how to structure expenses to make sure everything is optimized. Fuel. This is just an estimate of $100 a day at 15 miles to the gallon if you got a full size truck. And the price, you can change all of this. Obviously right now the price of gas is down, but it's going to go back up, and so that you can price jobs and then include your fuel on top of it. But for me, or your mileage on top of it, because you can just and it's pretty easy with the Google app, and you punch somebody's or any app, punch somebody's address in, see where they are from where you are. You got your mileage, and you just multiply that by the federal mileage rate, and boom, there's your mileage expense. And that takes account more than just fuel. But anyway, I just got that plugged in, and that's going to be let's see, I need to make this so I need to make this per day, so that would be 100 times that. So let's see what that does. There we go. All right, then membership. So a membership to Nuisance Wildlife National. Excuse me, I messed up when I was talking to Stephen Van Tassel. The National Wildlife Control Operators Association, $250 a year. Actually, just joined that today, and then your local, state, and national trappers associations. I think that's not only do they help support trapping, but this is our businesses are a part of that too, and things that get passed in the legislature, even if it's just targeted or sold as targeting recreation, it can and most likely will impact us as wildlife control operators as well. So just figured in that there. A phone plan. So I'm on Straight Talk. It's $45 a month. That's pretty simple and straightforward. One other thing that I need to include in here. Geez, I'm thinking about more and more stuff. So I need to break this out. Let's see. So I'm just going to call this software. Give that a heading so we can kind of line some of this stuff out, and then we'll call this Microsoft. This Grasshopper, that is a phone app that actually gives you local business numbers, like a local business number. So, a lot of us, I got my phone number when I was in high school, and now actually I'm back in Georgia, so it's not a terribly far off number, but it's still not local to some of the areas that I service. And so I'll get questions or get people that don't answer when I try to call them back because of where my area code is. So you can get a local number, and there's plenty of options for this. This is just one that was recommended actually by Kyle Waltz, and it's one I've started using. I've been using it about a month now, and I have no problems with it, no complaints with it. But it gives you a local number, and then it also gives you the ability to manage your calls and leads from that separate number. So now I can kind of keep track and keep things separate of calls that come in, and so and that kind of keeps your personal number out of the circulation. And then, like I said, now I can pull up all my text directly with customers, and I'm not trying to scroll through my text, all of my personal text, and then find out where my customer texts are. And it integrates right with your phone, so I can save a customer contact in my contact list. When I open the app and want to text them, I can open the app and pull up my contact list and pull them up right out of there. So it's pretty darn convenient, and I like the separation of it. I think it's $30 a month. So there you go again. Again, that's all stuff that you need to figure in, and that keeps you from needing two phones, which would be silly. So you still got a phone plan, and then you've also got kind of a call management system. You can add extensions and stuff, so it's pretty handy. And then training. So I actually just noticed yesterday when I was looking on the NUCOA website, they've got a webinar scheduled for training for their wildlife control operators, kind of introductory training. It's a 2-day training scheduled for May 1st. This episode, I'm not sure. This episode should air. I don't know if this episode will air before then or not, but that's $300 for members. And I'm also planning on going to their expo in 2021. So that's going to be travel. That's going to be hotel. That's going to be, I'm sure there's expo fees, and they've got trainings there as well. So that's definitely stuff I want to take part of in bettering myself as a business person and as a wildlife control professional. So, and I would say, don't feel like these trainings have to be specifically around wildlife control. And maybe you want to take some training about coyote trapping, from a coyote trapper, Mark Zager or Craig O'Gorman or Mark June or somebody like that. Build that stuff into here, because that's all stuff that's going to asset and impact your business, and you need to be thinking about that. business training as well. Just the business training that I went to, the business conference that I went to last year, it was more around internet business, but just like the Profit First book and some of the stuff around online tactics and stuff that I took away, it's well worth the experience. And I mean, that stuff's not cheap, so you need to be figuring on it. And so $1,500 may seem high, but to me that might be a little on the short side. And after a few years, you might get a lot of the training knocked out, but that you think you need. But then, like I see Dave Ramsey's Entree Leadership Summits and things like that. I mean, definitely some things that I would like to go to, and I think would be a huge value add to my business and me personally. That's stuff that can be built in there as well. So, and you've seen as we've been working through this, I thought of 6 or 8 different things to add through here. So that's where I encourage you, go through this. Let me add a couple more rows. I don't know how adept everybody is. I'm pretty well versed in Excel, and there we go. So that should be, so if you add any rows, you'll have to, let's see, I'll go ahead and pull this stuff down. So all you'll have to do is add the yearly cost and your line item, whatever it is, and then all this other stuff should calculate. But that's it. Like I said, there's a lot to go in here. There's a lot more to think about. I know I'm missing some stuff, so let me know what you think I'm missing. Let me know what you think I might be crazy about. But this, to me, this really opened my eyes and helped me see, and this gives me a good baseline, in my opinion, of looking at jobs and at least having an idea. One thing that I've found as I've been doing this too is people, you run into some people that want to negotiate with you. And so, having some of these things in here, like the materials estimate and just a few different things, gives what I feel like it gives me a little wiggle room, having that materials estimate, and then also having a materials cost built in on top of whatever my hourly or daily rate is. That gives me a little room that I feel comfortable knocking off or coming to the table a little bit to customers, because it's all about the relationship. But I mean, at the end of the day, they're trying to. Most people weren't expecting to have to shell out several $1,000s to get flying squirrels out of their attic, but it's something they need to have done. They realize they need to have it done, and so it's not something they're excited about, but something they got to do. So that is one thing that kind of surprised me a little bit. But so another thing to keep in mind is having some wiggle room, that if somebody wants to negotiate, you're not going in the hole if you do give a little bit on that. So I felt like there was something else when I got off on that I wanted to cover too. But anyway, I do hope this gives you some insight, gives you an idea, and it's going to take some time too to get a feel for how long a project's you think is going to take you. And there, I would say estimate on the long side. So I bid a job a month ago, and looking at it, and I had a guy that was going to help me, and so I figured in and I tried to figure conservatively, and so I thought 2.5 days between me and him, we could knock it out 2.5 full days. And so I went ahead and bid it on 3 days. And the owner did come back and wanted to negotiate, wanted to see if I had any room. Well, I used a higher priced product. It was actually, part of it was an exclusion job, and part of it was sealing the ridge cap. And so I used a higher price, so I was able to drop the price a little bit there. And then I gave a little bit on my daily rate, and they were fine with it. And I didn't feel like I was losing anything. We actually got it done a little bit quicker than anticipated. But you don't want to stretch yourself and wind up going over in a hole. And you're going to do that on some jobs. There's going to be some jobs that you get into, and it's like, oh man, I was not planning on this. But that's all part of it. That's all part of learning, rolling with it. Some jobs are not going to take as long and you're going to get paid more for, and then some jobs are going to take longer, you're going to get paid less. And so, ideally in the end it washes out, and you wind up where you're at. But this is I would say pretty eye-opening, maybe. Just to think that, all the expenses, a salary, profit, you're looking at a business needing to do $240,000 a year. But in the same breath, it's definitely, depending on where you're at, it's doable, and it's more than doable to have the potential to do way more than that. And there's other companies right now that are charging with these kind of models, and so hope this gives you an idea. Hope this gives you a starting point, a baseline, and take this and do what you can with it. And if you want a copy of this, email me. Put that in there so you can see it. Chris, Kris, at coyotetrappingschool.com. Shoot me an email about my pricing spreadsheet, and I'll shoot you a copy, and I'd love to hear some feedback. Let me know what you think, and hopefully this really helps. And I look forward to, if you have some feedback, if you try this and have some positive or negative feedback on how it went, how jobs have gone since you started doing this, man, I would love to get some feedback and hear too, because I'm new to this too, but and I'm just trying to help everybody along as much as possible, and including myself. I'm figuring all this stuff out along the way too. But this is how I've been pricing for a little while now, and it's worked out well for me, and it's definitely given me something a little bit more concrete than just looking and estimating. It's going to take me 6 hours at $50 an hour, whatever. That's clearly not enough. So make sure you're charging what you're worth, and you're getting paid for what you're worth. We'll catch y'all next time. So one final thing that I wanted to wrap up on, I've been thinking, I recorded the overhead episode a few days ago, and just thinking about that in conjunction with the prior episode about the predator trapping for quail nesting production, I guess, and plantation trapping, or long line predator trapping, whatever how you want to say. It just really, as I read that article, and then I thought about the sheet that I set up, that article, spit out an average cost of $200 a day for trapping for the landowner, right? And so, looking at that, the overhead sheet, if you break it down kind of as the one main factor that you could take away from was your hired help, right? So if you eliminated that category altogether, that drops your hourly rate. The way I had everything else, if you just left it alone, I think it was about $80 an hour, $800 a day. So at $200, that's what, 2.5 hours. So, if you're running, which is probably pretty reasonable if you don't really have any catches and you don't have to remake a lot of stuff. And maybe that washes out. And if you've got a couple of those properties that you can stack up, and you got some neighboring properties, and you can line it up to where you hit one and maybe you hit three. If you could hit 3 or 4, ideally, if you could hit 4, that would put you at your $800 a day daily rate that you would need, right? And some of it's going to wash out. That some of the days you're probably going to get more catches, you're going to spend more time, and some of the properties you're going to spend less time. But the more that I have thought about it anyway, things really have to play out just right for that, and you've got to be able to plan that out, I guess, is the kind of the way I'm thinking about it. And so you really start to see, even from just a trapping perspective, if you're not so interested in the exclusion, which, if I'm being honest, I'm not super interested in the exclusion, because that's not what I love. That's not. I like the trapping and the messing with animals and the challenge of catching the critters. Um, but as I've talked with people and I've heard other businesses and other employees talk about how some other um, wildlife control operation businesses work. Um, the money's in the exclusion. The money's in the exclusion and the kind of the remediation. From bat work, if you got to go in and replace insulation, things like that. So realistically, the more time that you can spend at one location, the more efficient you are. And so if you can build that and be able to sell, and you got that customer base that you're targeting those $1,000 a day jobs, that adds up, and you still have to string them together, to try to line up. Because ideally you got that 5 days a week, right, or at least 4 days a week, because that's what you're counting on. And it's more, I guess it's easier, especially starting out, to put that together. And I got this exclusion job going to be over 2 days, but that's $2,500. Then, well, I got this squirrel job that's $150, and this coon job that's $200, and this beaver job, and this and all that stuff. The more that stuff adds together, you got more time and go into each one of those places. So you've got a higher expense in fuel and wear and tear on your vehicle and stuff like that, versus pulling up to a stop, spending all day there, and being done. So that's just something to think about. I'm not saying one way's right, wrong, or whatever, but in thinking about it and thinking about building a business that can support you, me, and kind of the cash flow situation and how to do that, lining up those jobs and being able to sell those jobs that are high ticket jobs is, that's what, just, I guess to say it bluntly, that's what's going to pay the bills, right? In talking with Kyle Waltz, when I was talking with him, and I was trying to remember when he said, because some of the way these businesses are structured, they've got a salesman that strictly goes out and sells jobs. So you're talking about, an organization that's got a salesman, probably getting paid on commission, but if they're doing their job, they're getting paid, right? So you got a salesman, and then you may have a trapper, and then you may have somebody that does exclusion work. And so, you could be talking about, 3 folks plus an owner plus, office admin. So you could get up to 5, 6, 10 folks pretty quick. And that's how some of these organizations, these bigger organizations, like your Terminixes and Arrows and Rid of Critters and things like that, they've got all this stuff built in, and that's what they're targeting. And but I got off on a tangent there, sorry. But Kyle Waltz was saying, when they go out to a job, when their salesman goes out to a job, they're disappointed if they sell, if they can't sell a $1,500 or more service. And you think about that from a cash flow standpoint, from a revenue standpoint. If you make two of those sales a day, that's $3,000 a day. And then you can see how that, and it's not going to come that easy. Please don't get me wrong that you're going to go out and start selling. Because you're talking about somebody that's strictly devoted. He's getting leads funneled to him, and he's strictly devoted to selling those jobs. And so another podcast, and I really hope this is beneficial. But another podcast that I've been thinking about too, and that may come up next, is just the selling process. And honestly, I've struggled with it a little bit. I've struggled with it a lot, just from the standpoint of I don't want to be somebody that's that's pushy, that's pushing stuff that's not necessary, that's not required. I guess kind of the classic cliche stuff that we talk about or we think about from a salesman, hearing about a salesman, car salesman, or whatever. But I feel like I've got some insight into that and some thoughts on that make it less daunting or less opposing than I know I originally was thinking about it. So we'll follow up with that. But again, I thought that article and then looking at the spreadsheet itself really tied that stuff together well. Of you got to make a decision, I guess, if you're wanting to get into this. Do you want to be a trapper, or do you want to have a business, or do you want to be focused on exclusion? And not that each one of those is separate, but that depending on especially if you want a business more so than a job, and especially thinking about employees and things, and not being a sole owner operator where you have some ability to step out of the business if you want to. That exclusion work, I think, is key. And, overall, especially getting started, I think that exclusion work is really key to cash flow. I mean, it is for me, just speaking 100% bluntly. Tying down a 4-figure job is a hugely vital and critical part of my business as it stands right now. So I'm jumping on every one of those opportunities. Not the most exciting thing. It's not hog trapping or coyote trapping, but it's paying the bills, and hopefully it can provide some of that flexibility later on down the road. So anyway, I did just want to kind of go through as I thought about that and cover that and just touch on that. Just something to think about is how you're going to be structured, what you're going to focus on, and how you may think about that, because if you work up that that $800 to $1,200, whatever it is a day that you need as a business to keep your business operational, how are you gonna string that together? Is it going to be multiple jobs, multiple trapping jobs? Is it going to be primarily exclusion jobs? Is it going to be a mix of the two, or a mix of of different stuff? If you're just starting out, odds are it's going to be a mix. But it's a good time to think about how you're going to go about it, what you're going to target, and hopefully this gives you some good food for thought and ideas around how you might price your services, and hopefully price them fairly and competitively, because we're not, just because we don't have office admin and employees and this and that, doesn't mean that we can't and shouldn't be charging competitively with the other companies, because hopefully, maybe if that's your desire, that's down the road. Well, the sooner you start charging like that, the sooner you can get to that ability, to be able to hire somebody, or to branch out or expand. So and realistically, even if you just want to be a one-man owner operator, you should be competitive. In my opinion, you should be competitive with the other businesses in your area. So from that standpoint, if they're charging because they've got this overhead, some of that stuff somebody's taking care of, whether it's you or an office person. But some of that stuff, somebody's having to take care of, bookkeeping and accounting and things like that. So the bottom line is there's a lot more stuff that you are paying for than you realize. So anyway, I'll leave that for this episode. I appreciate y'all listening, following along. Shoot me an email if you want a copy of this spreadsheet. And man, I'd love to get some feedback from some of y'all as you look at it and see how it might apply, might be improved, or you might think it's totally crazy. Give me some feedback, let me know, and we'll catch you on the next one.